The other big development that happened recently, Aashish, was SEBI coming out and further reducing the charges.
Yes.
And the total expense ratio, or TER as it is called. How has that played out, and why is it important for an investor, since we are trying to educate our investors through the series, to look at the TER? Do you think that's a very important number to look at? How much does it vary across schemes according to you? How should I play the whole TER game, so to speak?
No, I think, again, this is another investor-friendly move by the regulator. So compliments to the regulator for thinking on those lines. And whether it's direct plan or regular plan, I think both of these places, the TERs have started to come down. And I think in the next couple of months, they'll come down much further, actually, if you ask me. This is just the beginning. Because there are certain regulatory changes which have been implemented in 2 stages. So there is a small cut in the first stage, but I think there'll be a further reduction, maybe maximum within the next 1 quarter. And any reduction, even if it is 0.2%, 0.3%, 0.5%, whatever reduction is there, year on year, it's straight away going to get added to the investor's return. So yes, TERs or the expense ratio is an important determinant of the ultimate outcome. But I would just like to say that, when you invest in equity, the return dispersion amongst good schemes and not so good schemes, the return dispersion amongst large cap, mid cap, small cap, the returns dispersion between, say, balanced funds and dynamic funds. So the returns dispersions between good schemes and not so good schemes and between different categories, the dispersion is very, very high. So I don't think that 0.2% or 0.3% is going to be the most important decision-making criteria. But yes, a reduction in TERs straight away matters a lot in bond funds, because there the return dispersion is pretty low and every 0.1, 0.2 is going to matter a lot. So long story short, I think reduction in TERs is great for investors. Equity funds, I don't think it's the sole decision-making criteria because dispersion is high. Bond funds, I think it would matter a lot more.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.